Welcome back, my investors and YouTube people out there. This is Seewing Yi, and my co-host is Justin Zawatney, our network team, a partner from Southwest Florida. And welcome, Justin, to co-host this podcast. How are you?
I'm doing great, Mr. Yi. Thanks for having me back again.
We are here for another update on the Southwest Florida market, especially for our out-of-state investors and anyone out there in the YouTube world who wish to purchase in Florida, specifically the Gulf Coast, Southwest Florida, which consists of Cape Coral and Lehigh Acres and LaBelle inland, the submarket, which we can talk about LaBelle, the inland emerging submarket, the path of growth. And so Justin has been helping our investor for the past several years. Our investors who purchased back in 2020 and 2021, their portfolio has grown 40, 50, 60% equity. And many of them have the capacity to leverage more to do cash out refinance to buy more properties. I'm not saying we don't know the future. We don't have a crystal ball, but even today, as we speak, there's some amazing opportunities, especially when the mortgage rate is continuing to come down. As we speak right now, the mortgage rate, according to Mortgage News Daily, 0.1%. We anticipate as the Federal Reserve continue to put their rates gradually, everything else, who knows? At the end of this year, we might be below 6%. The mortgage rate is springtime 2025, the spring housing market, everybody's going to jump in, and we may create a housing frenzy over again, whereby there's more buyers than there are sellers, where there are more demand to supply, which is happening. So investors need to be smart. They need to take advantage of the lack of competition right now. There's a lot of deals, a little bit of a buyer's market right now. And the buyers are giving you some amazing rate buy down, which Justin's going to talk about. There's so much opportunities. If you wait too long, if you wait 6 months now to buy investment property, guess what? You're going to competing against a whole bunch of people coming off the sidelines, and it's going to create a lot of competition, drive the home prices up. You will no longer get any concessions from the builder, from the seller, with this amazing incentive you're getting right now. Justin's going to do a deep dive into your specific market, LaBelle. You need to understand and what words come out of Justin's mouth, because he know the market. He's helped a lot of investors to make real good money over the past few years and into the future. Without further ado, go ahead and tell us what is going on. What kind of deals out there, Austin? I'm excited.
Absolutely. Thank you. Thank you for having me back again, Mr. Yi. This webinar, it's actually the idea for the topics. It came right from a conversation we were having. Every time we have a phone call or we're talking on a Zoom about different trends we're seeing, we could flip them up into 4 webinars every time. There's so much to cover, but this particular topic kind of building on our previous webinar, we talked a lot about the opportunity of LaBelle as far as the actual properties, prices, the fact that the builder is very negotiable right now. We're negotiating phenomenal deals for our clients. But now, why did we select this builder? What about them made this a really strong opportunity that we felt the need to share? And the biggest one right now is the fact that in their contracts, there is not an escalation clause. So what does that mean? An escalation clause is something that allows the builder to change the price from when you signed the contract to when you close on it. Right now, contracts are being signed. Some of these homes won't be ready until January, February, or even into March of next year. And we're expecting the market to shift dramatically over that timeline. If we have 4, 5, 6 rate cuts, there's going to be a tremendous amount of buyers in this market. More buyers come. Inventory doesn't show up that quickly. Prices theoretically go up. The builder can't change that price on you. So why is that important as an investor? One, you're creating equity, not from the day you buy the property, but from the day you sign the contract on the property. So you're going potentially 4 or 5 months. You don't even own it. You're not making a payment on it. All you do is put a deposit down and it's gaining equity for you. You're making money before you even own it. Secondly, without the escalation clause, it locks in the price, but you don't have to do a mortgage rate lock. So the mortgage rate can continue to drop that monthly payment that you'll eventually start paying and allow for more cash flow when you own the property. Think about, we did many webinars back in 2021, 2022, where we were talking about buy the home, lock in the price, lock in the rate, lock in your payment, let the equity grow, and save yourself the money on the interest rate because the rate was climbing so quick and make cash flow from that. We're in a scenario where the complete reverse is what's happening. Lock in that price today, wait while that rate continues to drop in your monthly payment, lock it in when you buy it. And now you're creating more cash flow, creating more equity because you bought before the frenzy. It's staying ahead of the curve, something we talked about last webinar. It's a big piece of the puzzle, staying ahead.
Yeah, Justin, some unscrupulous builders in the past, in some other locations that I experienced over the years, they do not have an escalation clause. For example, if you buy pre-construction and you pay the deposit, 5,000, 10,000, whatever, today, for example, 9 months later, and the housing market increased in the neighborhood, some of those builders, you have to pay the higher price when you close escrow 6 to 9 months later when the house is. So
Mhm.
those the scam situation does happen, but your builder are really are really helping the prospective buyers. That means if you lock in today's price, for example, at 300K and pre-construction, you pay the deposit. Then 6 to 9 months later, when the house is done, the value has gone up from 300 to 350. Guess what? The builder, because of the escalation clause, the builder contractually cannot raise the price on you to 350 when you close escrow. It remains at 300K. So if you close escrow 350, 6 to 9 months later, guess what? That 50K, that is your equity. It's a built-in equity, just like buying a 10, 20% discount. So
Mhm.
that is the value of an escalation clause. I experienced 2 escalation clauses myself several years ago, back in 2020, 2021. I received walk-in equity because I deposited money into initial property, and house was built. It's also in Florida, by the way. I'm not going to disclose the location. So I benefited from it because at that time, the builder did not have, they have an escalation clause. So I benefit, I have a walk-in equity close escrow. So same situation. I'm sorry. Go ahead, Justin.
And we had a number of examples from 2021 and 2022, your network investors pulling the trigger, buying the home, and they waited 5, 6 months and they made money from those 5, 6 months. Moving forward, obviously, we're both talking theoretically. We can't guarantee this will happen, but again, talking just basic high school level economics, theoretically, more buyers enter the market as interest rates drop. It's going to raise prices because supply cannot react in a 6 month period. New builds, if you're going to sell a home as a new build between now and March, it's either in permitting and under construction or it's not, right? New construction takes about 12 to 18 months to react to the changes in demand.
Right.
So if these dropping rates do raise demand, supply can't raise fast enough.
Yep.
And that means prices go up. That's just theory. You can't say that will definitely happen, but we're thinking it very well could. And it's a big piece of the puzzle for the investors. Another, again, just expanding on why, we work with certain builders and other builders we don't work with. We like builders who work in many different markets. So the builder that we do a lot of work with, they're building in LaBelle, they're building in Lehigh Acres, they're building in Cape Coral, whichever market is the best fit for the investor, wherever they want to be, we can find them a home. We can negotiate it and we can get those favorable terms in the contract that the builder offers. And we have flexibility. If they don't like a particular model one builder has, we have other builders who also, we make sure that the terms are correct. The terms and the location are the most important things when it comes to this. Things like price, down payment, interest rate. There's so many ways we can negotiate and change and make little tweaks, but certain things are non-negotiable. We can't change where the home is. Can't change, yeah, whether or not the builder is going to try to sneak in an escalation clause. And those are two things that we're doing a really good job to make sure we get the right properties for your investors.
Justin, that's the value you provide, Justin. Any other investors, no matter how much research they do in any market, in particular the Southwest Florida market, They just can't do what you can do because of your longevity in the market. Yeah, and you know the builders. You have such a great relationship with all the builders. You are doing all the deals on behalf of our investors. So that's the value you bring, and you can't put a price tag on that. So I appreciate your value add helping out of state investors. Yeah, go ahead, continue.
And then the other topic we've talked a little bit more about why, you know, Southwest Florida and now is the time. It's a lot of it also goes back to the quality of the tenants, right? At the end of the day, buying an investment property is half the battle, right? You got to have the right property. We also need the right tenant, the right person occupying the property so you can collect the rent and actually make money. Because if you're just paying a mortgage the whole time yourself, you're not really making any money unless some crazy scenarios happen. In Southwest Florida has some of the highest income earning tenants in the country. Truthfully, some of the rent prices that we charge for the value of the homes, they're not even practical in other areas of the country, the Southeast, the Midwest. Go to North Carolina or Alabama or Ohio in the Midwest or Illinois, right? You can't charge $2,300 a month for a house. There wouldn't, you'd have like 8 tenants in the entire county that could qualify for it. It wouldn't work. Here, we can. And the fact that we do screen our tenants as closely as we do, can verify their income, verify their rental history, leads to, in my opinion, some phenomenal collection rates. Some of our tenants fall behind on rent, pay late fees. There's scenarios that do come up. I can't say we're perfect. However, when it truthfully comes to they didn't pay, we had to have an eviction, it is one of the most rare occurrences across the homes that I manage. I would think probably any other management company in the country. I don't know if anyone else has had as few evictions as we've had. And it becomes from screening the tenants and having homes in areas where the tenants can actually make the income to afford them. It really, that, that second half, the ownership aspect of the investment is crucial. And that one-stop shop with my company, where we're helping you buy the property that works, that we're managing the property once you own it, you need both, or else no investment will ever actually work.
Justin, at the end of the day, your client is paying the price, whatever the price of the property our investors are buying. Let's say 300K, 300,000 at $2,300, whatever. Those clients, like we said, they tend to stay a couple of years or more as a tenant because they move into the area, they're looking to buy, but they're not ready to buy yet. They have a lot of excuses, which is fine. But the high quality tenant, B plus to A minus tenant, and they buy new construction where you have warranties also, and over time for the next 5, 10, 15 years, you have very low maintenance, very low vacancies, very low capital expenditures, and you can turn those low maintenance, low capital expenditures into a total return on your investment. And at the same time, you put 25% down payment with the buyer rate buy down. You can get cash flow right from the get-go at 25% down payment. How much cash flow? It's not that great. $200-300 monthly net cash flow. That's fine because you don't make money just on cash flow.
And we're going to talk more about this. We've already discussed our next webinar, but if all you're banking on is cash flow, truthfully building wealth is going to take such a long time, right? The amount of time you need to collect that cash flow, that little bit better cash flow, in order to buy your next property, it's going to be many years, right? Even if you're making $1,000 a month in cash flow, how long do you have to save $1,000 a month for the down payment on the next property? Could be a very long time.
Right.
The appreciation and the appreciation potential of this area, the flexibility that can create 3 years down the road, 4 years down the road in the right circumstances is incredible. And we'll get into that. I don't want to talk too much. That's our next webinar. But I think that the key here is the kind of buying the property, managing it properly. And one thing I will say, if we're going to find any negatives in this, right? Sometimes turnover takes a little longer. Maybe instead of 3 weeks, it takes us 2 months between tenants. But why? Why do we do that? It's about the right tenant. Some companies, oh, you got to move in. You're going to be first month's rent security. You say you can afford it. Okay, yeah, come on in. You can pay. And we're going to run into trouble in 6 months. Well, you figure out that you can't really afford it. Whereas, you know, our model, okay, you want to move in? No problem. Fill out this application. We're going to dig through your financials. We're going to verify employment, verify rental history, check, see if any evictions are on your record. Then we're going to make sure that you have first month's rent, last month's rent, and security deposit to move in. So you have cash on hand to cover that payment. It gives us the security of 2 months' rent held in case of any issues. It's just creating much more secure, solid foundation for the tenant who's actually moving in to actually perform. And that's such a big piece of the puzzle that you
Yeah.
need.
Oh, and yeah, for investors, that's very little or no stress. Because don't we all want that? We want little stress when you buy out of state properties. We want the focus on our time to what's important to our lives, not stressed out about managing your own properties. One more thing before we forget, the property you picked in LaBelle in your suburbs are not subject to hurricane issues or very minimal, if at all, not in a flood zone, and not the insurance premium are very reasonable or not reasonable.
Much more reasonable than having flood insurance. Absolutely. At the end of the day, we're in the state of Florida. If anyone sells you an investment in the state of Florida and says there's no hurricane risk, they're lying. You run away. Okay. It's the state of Florida. How being further inland, ideally, it's a weaker storm by the time it hits. You're not getting that direct coastal flooding surge that you see on the beaches and the coastal areas. And yes, it helps keep a lower, you don't have the flood insurance. All you're paying is a home insurance premium. And ideally, you're going to deal with less maintenance and damage from it. That is
Yeah,
what we.
new builds, they are built to safety code, in impact windows, a good foundation, they can sustain whatever. So
Yeah.
insurance company love new construction homes. They
Mhm.
love it because
Yeah.
they know. Yeah.
And depending on the builder you select, we have several builders who not only do they offer an in-house affiliated mortgage company, they also have a affiliated insurance company. So the insurance company knows the exact specifications of the home being built, quality of home being built by their partner company, and they offer very competitive rates because of it, helping again to create more cash flow down the road as opposed to dealing with an older home or whatever other situations are out there. So yeah, again, all uh, the thousands of little decisions that need to be made to find the ideal property. I like to think that we've done 60% of the legwork, right? With the properties that we've recommended. We can work with any other property you want, help buy anything in Southwest Florida. But the ones we're recommending, we've done about 6% of the work. We think these are really good situations. We just need investors to pull the trigger, do that last 40% of the legwork as far as locking in rates and the amount of down payments and things of that nature to end up in some really good situations for someone who wants investment real estate.
Yep, Justin, here's the bottom line. Okay. I will pre-screen my investors, right? When my member reach out to me, I will pre-qualify them, have a complimentary consultation. If I deem a particular investor really motivated, very serious, and we had a nice consultation, then I will send them over to you. Don't worry about the numbers right now. You guys out there, the pro forma, yeah, we have pro forma, but at the end of the day, when Justin picked the right property for you based on your criteria, based on your expectation, the property in LaBelle, which is way inland, that's a path of growth, way inland of the Southwest Florida, it'll be, right, will be a high 200K. It'll rent approximately 2,300. Justin will negotiate maybe a rate buy down or some other incentives coming from the builder. You will cash flow at 25% down payment. That is the key. That's all you need to know right now. Other than that, when I send you to Justin, he will work with you one-on-one, Zoom, over whatever communication means, and he will find the right property for you in the South market, which you will feel comfortable and invest over time. So 5 more minutes we have. Justin, what other deal, what other value you want to?
And really, my closing thoughts and final little piece I wanted to touch on is at the end of the day, let's face it, there's across the country, thousands, if not millions of other agents and investments and property management companies that you can work with. Why had Mr. E pinpointed my company for Southwest Florida? It's a service industry, right? Property management, it is a service that we are providing. And you're not going to find another broker who will get on the phone with you at 9:30 on a Friday night to discuss your investments, where they're headed, what you're doing, your property that's under contract, whatever's happening. Test me. I guarantee you I am more available than any other broker in the property management business you've ever dealt with. Ask Mr. Yi. If I don't answer a call, how quickly do I get back? It, I don't know, worst thing is stuck in my hand all the time. And that's, again, just the value that we're providing. If that's the type of service you're getting, think about the care that the home's getting. Think about the answers the tenants are getting to stay comfortable in the home that they're renting. It all just leads to a better overall performance of the investment.
Yeah, Neil, you don't have to promote yourself, but your track record over the past few years, working together, all the investors I've sent to you, every single one of them love your service, love you provide long term and short term, everything else. Everything it says true. So again, you work with Justin in this market, and then over time, for the next 5, 10, 15 years and beyond, you will be available to service them to meet all your short term, intermediate term, and long term needs. And that's why Justin get more referrals from my network, satisfied buyers from versus the other network that we will work with in the other part of the country. So one more thing I need to say, we all know we run out of time, so we can have another webinar. Next webinar, we can talk about our case history of past investors that purchased 3 or 4 years ago from you, and now their portfolio have grown 50, 60, 70% in equity. You know what they do right now? They do catch up refinancing from property to buy 2 or 3 more. They're doing 1031 tax-free exchange to buy 2 or 3 more. But I'm not saying the next 3, 5 years is going to happen to you, because no one have a crystal ball, right? You don't and I don't. But that's a possibility when you start buying property in a good market that have a path market, that have a path of growth, while low supply of inventory, high demand, job growth, population growth, migration of people coming to Southwest Florida, continue to do so from out of state, from Chicago, from the West Coast, from Pacific Northwest, especially from the Northeast, New York City, New Jersey, Connecticut, all those Northern Virginia, Washington, D.C., those people are migrating into Sunshine State, Florida, which 1,000 people, maybe less than 1,000 recently, maybe 955 people moving to Florida every single day as we speak, right? So see, the trends, the data is very factual, everything I just said. So my final takeaway, what is your final takeaway before we go?
Like usual, if anything we've said has even sparked the slightest bit of interest in Southwest Florida, get in touch with Mr. E, right? Like you said, he's going to pre-screen. He's going to talk about your situation, make sure that you're ready to move forward with the property. He's going to get you in touch with me. And that's when we're going to really start the work. We're going to start talking about specific properties that are available, different ways we can negotiate or put the deal together into best make it the most advantageous to buy now. And then we'll do FaceTime meetings. You can fly into town, see the properties in person, whatever you prefer. I make myself as available as possible to make this as seamless of a transaction that you're ever going to find.
What's the earnest deposit to reserve a lot, to reserve a house?
Generally, the builder is going to look for 10% of the purchase price. Again, it's real estate. It's all negotiable.
Right.
If you don't want to do that much, maybe we don't negotiate as much on price. We get a lower deposit. We do the full deposit. Then we really negotiate the price. If you're even interested, get in touch with Mr. E. He's going to go over, make sure you're ready, and then we're going to get to work and really put a deal together.
Okay, I keep saying here's my final recap. Here's my takeaway. Deal. DEAL. You're getting the deal right now before all the competition, before everybody else can come off the sideline. It's gonna happen. I'm telling you, I've been doing this for 2 decades investing. I see these kind of trends. I see this kind of data, and you're much younger than I am. Doesn't matter. It doesn't matter because you gotta get in front of the curve. Things are happening. Things are gonna explode. The floodgate is gonna open. The dam is gonna break. But
Mhm.
but now you're in front of the curve.
It's so one of the Warren Buffett, everyone knows about Warren Buffett, a multi-billionaire. He's been one of the best investors in the stock market of all time. One of the key points he makes, he invests in things he understands and he doesn't follow what's trendy, right? Instead, he only does what he understands. So how does that apply to what we're talking about? We're not saying, oh, buy real estate now because everyone's buying. That's a mistake. We're saying buy real estate when you're ready, buy a property that cash flows in a strong area that you understand. If we're making money every month, property's going up in value. Understand that that's an investment to make. And you're not just doing it because everyone else is. If we do it because everyone else is, that's the wrong reason. So we shouldn't be waiting based on what other buyers are doing. We should be buying based on what you as the investor are ready, when we have a good deal for you. And I can tell you, we will find a good deal for you right now. We need to know that you as the investor are ready. And that's what you talk with Mr. Yi about.
Yep, we see you on the next webinar. Some very exciting case histories of some of our past investors, just to share with you again how well they have done. Justin, I know everybody have your contact information, but before you go, can you verbally tell people your phone number so we can, just in case they write down what's your phone number?
Absolutely. I mean, my phone number, if you want to reach me, it's 239-877-4323. Again, the best process to use if you're interested, get in touch with Mr. Yi, go through your consultation, your pre-screening, make sure you're ready. He's going to put the two of us on an email, make sure we have each other's contact information, and then I take it from there, Southwest Florida specific.
Yep. With that in mind, Mr. Justin Zawatny, the legendary investor, consultant, counselor, expert in Southwest Florida market for out-of-state investors such as yourself out there. Thank you so much, Justin. We will see you on the next video very shortly. Have a nice day, everyone. Thanks for watching. This is Seewing Yi. Have a blessed day. Have a nice day. Bye-bye.